I am Daniel, an active professional prop trader for 8 years. I aim to help beginners earn through trading. I run the FX Community Trading Lab. Please see the description below for more details. Today, I'll discuss gold's technical analysis, incorporating insights from the community. I'm currently showing the 1-hour chart. To start with a short-term perspective, if the body of this recent bearish candle closes below the low of the doji, I'll consider it a bearish outlook. Let's move on to the daily chart for a detailed explanation. First, we need to review the overall market environment. I apologize for the repetitive explanation, but the overall trend is a sideways range, using this candle and the previous one as a reference. Within this sideways range, we are currently testing the lower boundary. A minimal downward trend that started here is continuing. The daily chart interprets this situation. The previous day closed as a long-legged doji bearish candle. Since the preceding candle was a bullish doji, I explained yesterday that the market would likely trade within a sideways range with the upper limit at $4,740 and the lower limit at $4,657. Yesterday's market indeed closed within this range, inside the doji. You can see it was a range-bound market. Looking at the body, it closed with a sufficiently large bearish candle body, indicating that the downward trend is continuing and the bias is stronger to the downside. That's all for the daily chart. Let's move on to the 1-hour chart for time-based analysis. Regarding the 1-hour chart, I believe the previous YouTube video was filmed just before this sell setup was formed. I explained the timing and profit-taking strategy for trading within a volatility contracting sideways range. It's currently creating a sell setup right at that key level, and you can see a significant drop afterward. After the broadcast, the price moved exactly as the scenario predicted. It dropped significantly by about $62. In pip terms, that's a $62.82 drop. This is exactly the scenario I predicted yesterday. So, the scenario I presented yesterday involves strategies for trading within a volatility contracting sideways range, as well as identifying areas where buying pressure might emerge near recent support levels. Indeed, we saw buying pressure around the New York session close. Looking at today's price action, after reaching the high of the Tokyo market, a clear reversal pattern formed, followed by a significant downward momentum. When updating the low, a bearish candle is formed, and adjustments are made within a sideways range, indicating a time correction. This correction suggests that bulls lack the buying power to challenge the upside. Similarly, after forming another sideways range, the price has now broken out downwards. It's about 30 minutes into the Japanese session, and the 1-hour candle is about to close. It will likely break out downwards from this bearish doji, and we can expect a decline equivalent to the width of this sideways range. The outlook remains bearish today. That concludes today's gold analysis.